And believe it or not, that used to happen to me a lot. Like I used to go on weeks of just green days and then a couple red days, and I would give back most of the gains. Why? Because I let one mistake turn into two, three, four, five mistakes. And just like I talked about in my previous video, the reason why successful traders are successful is because they're very good at not letting one mistake turn into many mistakes.
Guess that's the cost of only being human. I'm near a decade in the game, still learning like a student. My focus never been the fame, only constant improvement.
Alright, welcome back to a new video lesson. Today we're going to be going over the most common trading mistake. And this one definitely held me back for a long time because I just kept repeating the same mistake over and over. So I think making a video on this is going to help a lot of people out because it's a really common mistake, and it really changes the game. It could be that one factor that's holding you back from being a consistently profitable trader. So yeah, let's jump right into it. The most common trading mistake that I see people do, and that I used to do a lot, is drawdowns. So this is what you want your equity curve to be like, and the one on the right is what most people's equity curves end up being like. As you can see, everybody's going to experience drawdowns, but it's how you react after that first red day or after that first big red loss that determines what's going to happen next, whether you're going to establish a higher low here, or you're going to just keep on going more down and give back all your profits that you just made. So today we're going to talk about why this happens and what you can do to prevent that cycle from happening over and over again. Because what used to happen to me was I used to have like a green month, and then in a couple of days I would just give it all back. And it's a frustrating cycle, and I think a lot of people go through that. So let's talk about why that happens and how we can fix that. So the first really important thing to take note of is that the market is our boss, and you can't not listen to your boss. You have to listen to what the market's telling you, and the reason for this is because the market always gives you opportunity, but it's not always the same amount of opportunity. So everybody has a different edge, but most people, especially if you trade similarly to me, you trade momentum, you trade breakouts, and you mostly trade calls to the upside. And the best time to do that is when the market is uptrending, obviously. This is a chart of SPY on the left here, and the time when we're going to make the most money as momentum breakout traders is when SPY is above the moving averages, which happened between October 14 all the way to November 26. That's when we lost it, and we go under the moving averages. So during this time, this is your time to seize the opportunity. This is a time where you're going to be able to double, triple your account and really make the most out of it. Or at least you should be doing that, because there's lots of opportunity. If you don't believe me, check the names that ran during this time. You had Tesla, you had Nvidia, you had AMD, you had Plug, you had Lucid, you had all these names that ran during this time. Why? Because the market was in uptrend, and that favors breakout trades, momentum trades, all that sort of stuff. This is when you're going to get followed through in those trades. This is when you're going to see those big 5-10% moves in a single day. So you have to seize your opportunity here, because if you don't take advantage of this time, then it's going to make it 10 times harder to be profitable. And we already know how hard it is to be profitable already. So like, imagine making it harder on yourself. So you want to make sure you're taking advantage of this. And so here's an example of my record during October 14 to November 26. It was mostly green days. Why? Because the market was favorable to me. It's not because I'm the best trader in the world. It's because I just took the advantage that was given to me, which was pretty easy setups that presented themselves. And that's going to be reflected in your P&L, or it should be. And then once we get that switch over to where the market is no longer in our favor, there's things that we need to change, which we're going to talk about in the next slide. And a lot of people probably saw a red day on this Friday right here, which was after Thanksgiving, because we gapped down like 2% on SPY. And so if you were swinging any call position because you thought the market was in uptrend, you probably opened pretty red that day. And I saw a lot of people red that day, and that's completely normal. That's completely okay. It's not really a mistake that you were swinging calls over the weekend, because the market was in an uptrend. And until we lose that trend, there's no reason not to, keep swinging stuff until the market tells us otherwise. And so a lot of people saw red on this Friday, and they gave back some of the profits they made during this time. But the key thing is how you react after that first red day. If after this first red day, then you start spiraling and you let these next 5 trading days turn into red days and you give back most of these gains, then, it's going to be really tough to be profitable because what you just worked on for like a whole month, you just gave it back in 3-4 trading days. And believe it or not, that used to happen to me a lot. Like I used to go on weeks of just green days and then a couple red days and I would give back most of the gains. Why? Because I let one mistake turn into 2, 3, 4, 5 mistakes. And just like I talked about in my previous video, the reason why successful traders are successful is because they're very good at not letting one mistake turn into many mistakes. So let's talk about that. So the first red day, like I said, is very key because it's how you react to that first red day that determines what's going to happen next. You can either establish a higher low, like we saw in the first slide, establish a higher low, or you can give back all or most of your profit. And this goes back to what I've preached before in previous lessons where it's really important to stay 60-40. When you hit a big win, it's you can't go over 60%. And when you take a big loss, you need to stay above 40%. But what ends up happening is that after that first red day, people start looking at the equity curve. So let's say you started with 10,000 on October 4th. Right, let's just make an example. Let's say you started at 10,000 here and you grew your account to 30,000 by this candle, right? And then you see this, right? And you're going to get back a decent amount of gain. So let's say you're at 25,000 now. What people end up doing is they start thinking of it as I'm down 5,000 instead of realizing, okay, but overall, I'm still up 15,000. So instead of going into the mode of, okay, I'm going to protect these 15,000 of gains, they start thinking, how am I supposed to make up this $5,000? And by doing that, they're not realizing that it's no longer time to be aggressive, it's time to be protective. So then they end up, sizing in too much into the next trade. And because the market's not in their favor, there's a higher chance of them seeing red trades. So that 5,000 turns into 10,000. And they're like, and then once they're down 10,000 now, then once again, they're not thinking, okay, but overall I'm still up 10,000. They're like, fuck, now I gave back half my gains. We need to make that back. But because the market's not in your favor, that's going to be really tough. And usually what ends up happening is you just see more and more red. And then next thing you know, you've given back 90% or more of your gains that just took you a whole month to make. And that's the thing, that's the frustrating thing about trading. It takes a long time to build it up, but giving back gains can happen in 1, 2, 3 days. Trust. And that's why that first red day is really important, because being able to react on that first red day and then moving forward, sizing down, that's very, very, very key. So how do you go into protective mode? Well, pretty simple. You size down, you start trading less, you be even more selective, because even when we're aggressive, we're selective, but you have to be even more selective when you're in protective mode. You're probably gonna be taking less swings and less positions. You're not gonna be holding as many positions at the same time. And the reason you want to go into protective mode again is because once we start experiencing one red trade, our confidence kind of drops, or one red day, I mean. Especially if you were on a green streak, if you saw like 5, 10 green streaks, and then you see that one first red day, you gotta stop yourselves and realize that it's okay. There's gonna be time to make it back. When market is back in uptrend, then we're gonna be able to double our account again. But for now, it's just all about being protective. And you gotta think bigger picture, more than just, okay, what are my results for this one day? You gotta be thinking at least weekly or monthly, on a monthly basis. And going into protective mode allows you to build up that confidence again slowly and in a systematic way that's going to protect you in case, because the market is not in your favor, it protects you from that. And so let's go back to the example. You started at 10K, you grew to 30K, and then you dropped to 25K. Okay, well, now we're going to be risking, let's say $500 per trade. So even if you see a red day, and you see like 2-3 red trades, you're not going to go down to 20K. The most your job is to like to 24K, 23K. And as your account starts going more and more red, each trade you're risking less. And again, we talked about this in my risk management video where I explained extensively how to systematically do this. But basically, it's the same concept as when you're growing an account, you want to increase your position size gradually, right? And it's the same thing as your account starts seeing some red, which is normal. It's going to happen. Like we saw on that Friday, it's inevitable. You want to start sizing down as well as the more red you see. I hope you guys really take something from this lesson because it's really important, and I think a lot of people could benefit from this because I see it all the time where, these past couple weeks, the chat room has been killing it, and then as soon as we start seeing some red days, I start losing a lot on trades, and just being too aggressive, and then they start getting mad at admins for calling out bad trades, but they don't realize that it's because the market's not favorable anymore, and then we're gonna see choppiness, and we're gonna see no follow through on breakouts. You're gonna see a lower win percentage, and that's why it's important to size down and know whether it's time to be aggressive or whether it's time to be protective. During this whole time, it was time to be aggressive, and this is the time to make your money. And now that we're under the moving averages and we're seeing choppiness, we're seeing red days, we're seeing no follow through, we're seeing false breakouts, we're seeing all this stuff. It's frustrating, and it requires patience, and it's not the most fun time to trade right now, but eventually we're going to be back in an uptrend, and you just have to be patient enough to trade smaller during these times. Wait it out, because it could last a couple of days, it could last a week, it could last a couple months, but it's okay because we've already made our money. We grew our account tremendously during this time. We saw huge trades. We saw Lucid, Tesla, like I said, Nvidia, AMD, all these trades that we saw 300% plus gains, 500% plus gains on options. We probably won't see the same results right now, but that's okay, right? Right now it's protective mode. What happens the most is people miss out on trades here. They miss out on Lucid. They miss out on Tesla. And so their accounts are at 10K. They're still at 10K during these times. And so they want to see gains. And then they're playing it aggressive as you would want to during these times. And then they get hurt really bad. So important takeaways from this lesson: know what type of market it is, whether it's time to be aggressive or protective. And it depends on, your own strategy. If you like to play to the downside, then maybe right now is your favorable market. Me personally, I like to trade in uptrends, and because like I said, that's when we're going to see the most follow through. That's when we're going to see breakouts, momentum trades, which is what I trade. So for me, uptrends are a favorable market. Find out what that is for you and know how to react accordingly. So if we're an aggressive market, you have to be aggressive. You have to make your money. If you miss out on trades during that time, that's not good, and you have to improve and make sure you're not missing out on opportunities during those times. And then when it's time to be protective, know how to be protective, size down, and be disciplined about it, and take less trades, be more slow, all that stuff. But yeah, that's all I got for you guys today. Hope you guys enjoyed it. If you guys benefited from this lesson, leave a thumbs up, leave a like on the video, helps out the channel. And if there's any future topics or questions you guys want me to cover, just let me know in the comments or let me know in the Discord, and I'll make sure to make a video on that in the future. But anyways, I'll see you guys in the next video or in the Discord. It's in Me0, and I'm out. Peace.
I'm back in the basement, more concerned with living dreams and these lavish vacations. 10,000 hours in my craft, keep establishing patience. I feel empowered when I rap, this ain't average creation. This my genesis, hunger come with benefits. I'm always unsatisfied and sharpen up my penmanship. Competition with myself, ego still the nemesis.